Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we are going to do an update to the Las Vegas real estate market. This is for January. It's early January here.
Right. So Happy New Year if we haven't seen you since. This is the first update of the new year. So welcome to 2025.
So the last video we did was the boomers and all that. This is our Las Vegas real estate market. We're going to go through all the numbers that we have. Same numbers we use every time, so we have a consistent number of data. My belief is that we will see more sales in next year than we had last year.
In 2025.
2025. There will be more sales in 2025 because there will be more homes come on the market. That's the thing constricting. We would have had 1 million more sales in the U.S. if 1 million more homes had come on the market. The thing that stopped people from buying is the lack of inventory. What do you think about that?
So I would agree with that. Absorption has not been the problem. Lack of inventory has been the problem. And as far as the numbers that we use the same data points every time so that we can get a consistent view of market trends. So this is not for your specific necessarily area. We're just looking at one data point in Las Vegas so we can establish a trend.
Okay, so we'll start right now. Real-time market profile. We got some really good slides here that are going to sum up what's happening and what's likely to happen in the spring. Okay, the first thing I want to focus on here is this median price of new listing. Now, the median list price, as you can see, that $549.9 hasn't changed in like 2 months. The median price of new listings, though, effectively is the same as it was in September. So it's $499.5, it's $499.9. It's basically statistically just the same. That's the median price of everything that came on the market in the last week. The next thing I want to point out in here, we've got a price per square foot chart we're going to show you in a bit, is inventory. Oana, 3,500 houses were on the market. This is only in Las Vegas. It doesn't include Henderson, North Las Vegas, any of that. 3,500 houses on the market. Mm-hmm. There's only 3,100 available right now. So we've netted, 365 more homes have been purchased than have come on the market. We've got another great chart to show like what price range those are in.
Right. So that's natural for this time of year, right? Because you've got people who are not going to put their homes on the market November, December, or maybe they'll take them off the market for the holidays. So because of those reasons, that's natural for this time of year.
Okay, here's a chart market action index. Now what we did on this one is this is the last 5 years. Those two humps that are around 20 and 20, 21, 22 were anomalies. Mm-hmm. That was extremely low interest rates, a bunch of stuff happening, some inflation happening, and real estate got super hot, like incredibly hot, pretty much everywhere in the country. If this chart were to go back to 2014, it would look like the last 2 years have looked. It's just, the market's, basically most of the year a seller's market. It gets a little hotter in the spring and it gets a little softer this time of year. This perfectly explains. So when you hear the Crash Bros talk about how terrible it is in Vegas right now, it's like this every year. There's not going to be, 10,000 houses sell in the month of December.
We don't have 10,000 homes to sell.
We don't have 10,000. As you saw, we only have, 3,300 or 3,100 homes. Right. There's not many houses available for purchase.
Right. So look, the homes that are priced appropriately and that look good, those homes sell. Everybody else is either fishing or a wallflower, and those are going to take longer to sell. Okay,
this is the inventory chart. As you see here, every year at this time, inventory is on its decline. It peaks effectively in maybe November, and it starts declining all the way really into May and even into maybe June. But April, May are usually the months where we have the least total of homes on the market. I want it. More home sales happen in March, April, May than in October, November, December, right? There's more sales happening, but there's also more homes coming on the market.
Right. So, anecdotally speaking, we've had lots of clients come and say, okay, I want to put my home on the market, but I don't want to do it now because it's November now or because it's December. I want to wait until after the new year. And we tell them, okay, well, that's great, but we need a listing agreement signed because we can't order your photos until we have a listing agreement signed. and then people kind of do whatever it is that they do. They get busy, whatever. And so the thing that I found is, just like I said, it's going to get really busy in January. And photographers, depending on, price point, depending on reputation, quality, all kinds of things, depending on the photographer, they've got a lead time of anywhere between 1 week to a month or longer. And what that tells you is that there are a lot of homes getting ready to come on the market, that where the bottleneck is the photography, the drone work, or whatever it is that they're having done. So these homes will come on the market between now and, say, mid-February. They'll come on the market. But what you're going to see is that the homes are still going to turn, right? They're still going to sell. So you're not going to have this huge net of homes coming on the market where it's like, well, we have 3,000 homes on the market now, we'll have 4,000 homes on the market in a month. Not so much.
Right.
Homes are still being absorbed the whole time. But this is an opportunity for buyers, right? Because new, fresh inventory is coming on the market, and we know that from the lead time that the photographers have.
Yeah, that's the biggest thing holding back the real estate market, is enough homes that people want to buy. Because people don't just say, well, I'm going to buy, so I'll just go buy whatever is out there. They don't do that. They have a specific thing. If it's not available, they just don't buy it.
Right.
And then when it comes on the market, it could potentially get competitive. Here's another chart I found I really thought was interesting. Oana, properties with price decreases. Now, this also peaks in like November. We have the most number of people dropping their price. Like maybe the agent said, oh, I think it's worth $550. And then the person says, well, let's do $570. And then they have to drop the price, right? But that number is declining. If you look at this chart every year for the last 5 years, this time of year, this is a great forward-looking thing, because if less people are having to decrease their price, that means they're getting offers right away with their initial list price, right? So
yeah, that's kind of twofold. One, it's that they're getting offers with their initial list price that are in the ballpark of what the seller's willing to accept. That doesn't mean that they're getting less price, so please don't confuse the two, okay? And then the second part is that sellers maybe get a little more realistic because they've had a little bit of benefit of hindsight of what homes have sold for and what homes have been sitting on the market for and not selling. So maybe they're coming on the market at a more realistic price.
Okay, this next one's price per square foot. Price per square foot, this is a 90-day average, so this is, if you move the window 90 days on a specific date, it shows the price per square foot. This actually despite some of the crash pro charts show like home prices have done this and they're obviously going to correct. And if you look at this chart, they haven't done that here in Las Vegas. The other thing too is, remember that bottom line's 150. So if you drop this chart all the way down to 100 or to $0, and then you stretched it out back to 2012, 13, 14, you would see that home prices have done this very, very steady appreciation here in Las Vegas, with the exception of 2020, that little hump there. That was mostly a fake thing because interest rates are going up. So people basically said, look, I don't care what I'm going to buy. I can still get a 3.5 rate. I'll overbid, just get me in. Meaning they would rather overpay by 30, 40,000 to get that rate locked in than, be competitive. So we saw this because we were listing a whole bunch of homes. Like everything we listed in the spring of 22, I think got offers, and we were under contract within like 2 days, right?
It was a good market.
Okay, that is not the baseline for home values. So people say, oh, look what happened that next fall. That doesn't mean anything. If you look at these dots, today's date over the last 5 years, this shows a trend. It's a very reasonable trend that this would likely continue. Homes are worth more than they were last year, more than they were 2 years ago. And interest rates wanted for the last 2 years have been 6 or 7%. Mm-hmm. Interest rates 3 or 4 years ago were 2 or 3%. But look, home prices are still up. Home values are still up despite interest rates.
Right. So look, interest rates are not going to tank anytime soon. Probably for the first part of the year, they're not going to do a whole lot. Maybe they'll improve a little more noteworthy for the second half of the year. But the first half of the year, they're just going to do kind of what they've been doing. However, I think buyers are ready to go out there and find the right home for them because they know that when the right home comes along, that's the time to buy it, because it doesn't come along that often, because I don't expect that inventory will explode. I think inventory will do kind of what it's been doing, not a whole lot. And that's for a variety of reasons. Interest rates is one of them, but then the other is just this whole fear that sellers have that if they put their home on the market, they won't have anything to buy.
Yeah, that's the biggest problem is the move-up buyer. Now, what we've seen is we've got another chart to show you still that talks about where in what price ranges the homes are selling. But is the people who are like, we're leaving town. Like we came out here for a job, we did our 5 years, we bought the house. Now we're selling and we're going back to wherever for whatever reason. Those are pretty much the kind of listings that we're seeing right now.
Right.
We're not seeing a lot of like 20 years ago, it was, I'm going to sell this house and buy the next house because my interest rate's going to go from 8.5% to 6.5% or something like that, right? I'm going to get rid of the 8.5% and just buy a house. It made sense back then, actually, instead of refining your house, to just sell the house and buy another house. It was actually a better deal in a lot of cases. Okay, this is the market segments. Now, what's interesting on here is this thing I've circled in red. New means this is just the last 7 days, last week. This is how many homes came on the market in Las Vegas in these price ranges. Now, these price ranges are the quarters of the market, the top quarter, the second, third, and the bottom quarter of the market. Now, it makes sense that the top quarter would have the absorption rate's about the same, but you would think the top quarter would not perform as well as the other quarters of the market. What actually this shows is the top quarter's done very well. There were only 24 houses came on the market in which would basically probably be 850 and above. Okay, 850 to 20 million, right? Only 24 came on in the last week, but 49 were purchased. So that meant that 24 of the 24 came on the market, and let's just say they were all under contract, and then 25 more went under contract.
Right.
Okay, are you, because you're Miss Luxury, you're the big broker, are you seeing in those high price ranges, are you seeing luxury homes like being purchased? Like what have the last 3 weeks looked like?
So, December is usually a busy month because remember, these people generally are paying cash, so they're not hampered by the loan process, appraisal, underwriting, all that stuff. So because of that, they're able to close transactions quickly. They're also looking at end of the year. Because of tax reasons, they maybe want to close before the end of the year. So you see a lot of fast escrows, November, December, and particularly in December, you'll see a lot of 2-week or 10-day escrows.
Cool. The next two segments of the market, the middle, kind of the meaty part of the market, this is where there's just a lot of, like more people are buying in this market with loans. It's still more properties are being purchased than are going on the market. This is why the inventory is declining. Expect this to continue. And then the bottom of the market there, this is a lot of first-time buyers and investors. There's some cash in here too.
Right. So the bottom of the market actually has a lot of cash because those are the investors.
Yeah. The other thing too on here, just keep in mind, the reason why generally there are less new homes that come on the market in the higher price range, if you go all the way to the right, they're on the market longer. So the bottom of the market, the quarters churns more. You have more on and off than the higher price range, even though at any static snapshot of the market, those price ranges tend to hold steady because they come on the market and they sit for longer. Well, two houses in the very low one will come on and sell. And then the high-end one will sell. But the total number of homes in those are actually pretty steady.
Right.
Okay, what do you see given that we've looked at all this data, you have some anecdotal information, you're in the market, like we just took a listing and we just put a buyer under contract on a luxury home. What are you looking at going into this spring? Because I thought last year was a pretty good year, even though there weren't a lot of sales for a lot of people. We had the buyer broker agreement and the buyer realtor, the way that whole works with paying co-ops went away, but that really hasn't affected the real estate market. Like if you showed somebody the last 5 years of real estate and said some major thing happened with NAR, a settlement, and then you see prices still going up and everything still happening the way it did, you wouldn't have realized some external thing had happened, right?
Right. Nothing that's really consumer facing has happened.
Okay.
The best way I can describe it is more disclosure, but at the end of the day, the money's all still the same.
Okay.
It's all at the end of the day wrapped up into that purchase price, whether the buyer is paying it through the purchase price or is paying it separately. It's all wrapped up in that global amount that the buyer is spending.
Okay, if I was buying a house in Vegas to live in, let's say, I don't know that I would say I have to buy today, because while I do agree it would be more competitive maybe in April, I might have more choices. Meaning, let me ask you this, Juana. Would you rather have less homes to pick from that are what you like, but then not have much competition, or would you rather have more homes to pick up from that you like, and the fact that you may have to maybe make offers on 3 properties and have more competition?
So I think to me it depends more on the specific home. If I find the right home, then that's it. The competition is not that relevant to me.
Okay.
If what's most important to me is the financial part, then I would probably choose to participate when there's less competition.
Okay.
Because if I have to participate against a lot of competition, then I'm going to be paying more money and maybe facing appraisal issues, which means that I'll have to come up with cash out of pocket to meet the difference between the appraised value and the purchase price if I'm using financing.
Okay. We are going to do probably weekly updates for the next probably 3 or 4 months if we can. Maybe not. Maybe we'll have to skip a week if we travel or something. Because I think it's going to be fun to watch. You know, the Crash Bros narrative is all, oh my gosh, this is fine. This is the 6th year in a row we predicted the housing market will crash in Vegas. It's finally going to happen because, and I don't know, you know, they make up some number, but it'll be interesting to watch all the things we've said for the last, really since 2008 when we started making these videos, sort of play out when real estate does exactly what it kind of does every year.
Well, but the Crash Bros say that they're right every year too.
Oh, this is the 20-year anniversary of our company.
It is.
We founded our company 20 years ago, Nevada Realty Solutions, and it's been a very interesting ride. We've sold 8,000 houses as a company and 3,000 just you and me.
Yep.
That's pretty good.
Pretty good.
You can live on that.
Not bad.
Okay.
All right. So if you had fun with the video, please remember to like, subscribe, and hit the notification bell. Leave us your real estate related questions and comments. We really appreciate them. Any video suggestions are welcome. Otherwise, if you see us out in the wild, please say hello. We appreciate meeting you guys, and we'll see you on the next video.
Bye.
Bye.
Bye.